Hello and welcome everybody to day 38 of the trading marathon here on this channel. My name is Daniel, and in today's video we are getting some practice in about the smart money concept of the break of structure. And we already discussed the overall concept, but in today's video we are going into the charts and see where we can actually detect one of those break of structures. And the difference from a break of structure to the liquidity sweep, which we discussed in yesterday's video, is basically that after a break of structure the trend is not reversing but continuing in the order of the break. So to say, the liquidity sweep, it breaks previous highs or lows and then reverses in the exact opposite direction, so that all the people who got stopped out, so to say, regret being stopped out. But the break of structure is when previous highs or lows are broken and then the price even gets a further boost from this moment. So basically a moment where the people have set their stop loss and take profit at a good price and are happy that they got stopped out there afterwards, because it's kind of like a breakout or breakdown moment, okay? And in today's video, first of all, we are going over the graph that I've prepared to refresh the knowledge that we have already discussed about the break of structure. But more in detail, we will go into the charts, and I will also tell you in Elliott wave perspective how to determine if something is more likely developing into a break of structure or more likely to develop into a liquidity sweep. So that's the very important difference that we need to understand, okay? And that's the real value out of this video, okay? Because everybody can make a video of a break of structure and tell you all the time when something moves in a big direction. But we need to really understand the moment or the point of breaking and the levels that are being broken before or in the moment when this actual move happens, and understand the difference to what highs are actually not so important and will most likely only result in a liquidity sweep and reverse, okay? So, first of all, let's take a look at the graph that I've prepared. It's just really, you won't get much value out of it. It's really just showing previous highs and lows being broken and the trend following through and following up in the same direction. So, okay, we can have it on a side here of the chart so you can read the small little details, make a screenshot, but let's point it out, or let's find it on the chart when it actually helps us. Actually there is one break of structure right now unfolding on the Ethereum chart, which in my opinion, confirms a short movement, a move towards the downside here in the very short term. I can also show you. For example, we expected here an A wave to play out, a B wave and a C wave to get a 3-wave move to complete this WXY in a larger wave 4, and the A wave needs 5 waves, and we saw 1, 2, 3, 4, 5, okay, so clearly 5 waves are being counted in the A wave, and now see what we got there. We broke the wave 4 low, which played out in a 3-wave move, exactly as we needed it. To the downside, we established a lower low, so that's in my opinion already a smaller break of structure towards the downside, which could really likely result in a follow through here and develop into the B wave here in whatever way it's going to be. It can, for example, make a smaller 1, 2, 3, 4, 5 here. Let's say like this. Well, no, 3, 4, 5, and that's the A wave of this B wave. And then can a B wave of the B wave happen and a C wave of the B wave, and then this B wave would be done, okay? And then a C wave comes towards the upside to complete the Y, and that will complete the wave 4. So that would actually be the pattern that would make sense here in my opinion, and that's also why we are getting a small break of structure towards the downside. But let's also find one where it actually played out like in a way that it's clearly showing to be a break of structure. For example, in this ABC, we're seeing, if we highlight the B wave as the triangle that we already multiple times discussed in our videos as the ABCDE triangle, if we draw exactly what we have established already earlier in our analysis, and then we highlight the moment when the D wave gets broken towards the upside, that was really the moment when we got a break of structure and a strong push following straight afterwards. Let's go to the other moments where it happened. It's always basically the moment when a wave 1 gets broken in the direction, or an A wave gets broken into the direction. So basically in a moment when it's only gonna be a follow through in the C wave or a follow through in the 3 wave, but in both waves it's gonna be a follow through. That's the moment when either a liquidity sweep or a break of structure happens. But when it's a C wave, then it's gonna result in a liquidity sweep. We'll just finish the C wave and reverse. But when it's a wave 3, then it will give this break of structure. And so what you can hear out of that is that in a break of structure, we always need it to be a wave 3. So that's the very important detail in the Elliott wave perspective to decide if we are getting a real break of structure or a wave C only. We need to find out if we are developing in a way which more likely supports the view of it being a wave 3, which has higher targets, than a wave C. And you can only find that out by counting the microwaves and measuring the micro targets for those micro extensions to find out early enough to act before the moment or to act when the break of structure is actually playing out, or you identify after it happens that this has been a wave 3 and not a C wave. Wait for a retracement in a wave 4 so you can trade the wave 5. So those are all the moments when you can actually do something with it. But let's, for example, that's a pretty tricky example because it has such a long wave 2. But let's have a look here. We got an impulse in a wave 1, then an A wave, B wave, C wave of the wave 2. So let's highlight the moment when a wave 1 had the maximum, when it bottomed here, because it's a wave towards the downside. It was exactly this moment when it finally, with the wave 3 movement, got broken, and that's really when this whole thing got some power in. Okay, so the break of structure is when you realize, well, this is not just a short-term break of previous lows, and it will shoot up. No, it's more likely to just continue the trend because there is absolutely no momentum in the other direction. A liquidity sweep, it always plays out pretty fast because it just sweeps and reverses. The break of structure is kind of like a thing which sometimes consolidates in the direction until everybody realizes, okay, it won't be a liquidity sweep. Boom. The thing is, without the Elliott wave knowledge, you wouldn't be really able to determine if it's going to be a break of structure or a liquidity sweep at all. But when you have already made your Elliott wave analysis, then it's very nice to focus. If, for example, when you expect a wave C, something like a short, liquidity sweep at the end of it happens, then oh, this was an ABC, the C wave is over, that was our liquidity sweep, so that's now the moment when we reverse. And on the other hand side, when you, for example, see a 1-2 and you enter a long position in the bottom of the wave 2 and you expect it to be a wave 3, and then you are in the trade but you still don't know if you will be right or not, and then you see the previous highs taken out and the moment when, so to say, it's deciding if it's gonna only be an ABC or a 1, 2, 3, 4, 5 as you are betting on, and then you get this massive break of structure which just gives you a confirmation that you are right and you are in the wrong, that you are in the right count, and that you can continue to handle your trade in the way you are doing it. So really only in combination with the Elliott wave theory knowledge it's powerful to use, otherwise it would get very confusing at this point and you have no idea to which is which. But in addition to Elliott wave, it's very helpful, guys, and I encourage you to in a moment when it's decided, when there is the decision if it's gonna play out as an ABC only and reversing, or an 1, 2, 3, 4, 5, look if there is a liquidity sweep developing, and if there is a small impulse on a smaller time frames developing against your direction, then it's gonna result in a liquidity sweep. And if it's just coming down correctively always and continuing impulsively in the direction you are betting on, then it's probably gonna end up in a break of structure. Okay, so only when the smaller lows in the smaller time frames are breaking substantially, then also the bigger lows are probably gonna break until a moment of a strong, without the Elliott wave you couldn't really determine it, honestly. When I tell it out loud, without the Elliott wave you have no idea what is gonna play out. But when you have the Elliott wave knowledge, you just follow your count and you use this as kind of confirmation science, okay? So that's really the point of why I'm using it, why I'm telling it to you, because I'm looking, for example, you can also before it even happens, spot liquidity on a chart for a liquidity sweep, see where people put their stop loss orders on the small highs and lows on the smaller time frames, and then you make your L8OF analysis, trying to, you know, make a pattern which goes in this direction and reverses there, and that's the moment when this is possible, that where, you know, you place your limit orders there, you know, and then you watch it and hope it's not going to be a break of structure, or vice versa. If it's already going in your direction, you hope it's going to be a break of structure. It's just an additional confirmation, you know, guys. The liquidity sweep is very important for placing the order. The break of structure is more of kind of like the moment when you can be relieved that you're actually in the right trade. Yes. I hope that was helpful, guys, and I hope you liked the knowledge. If that's the case, leave a like down below the video, subscribe to the channel, activate the small little bell, and we see each other in tomorrow's video. Until then, stay hard. Wait 1 second. Man, I forget it every single time, bro. It's crazy. Yes, that was the 37th half marathon. So right now, after this video, I will go and run the 38th, and then there are only 4 more days until we're done, guys. We're pretty close to an end, but also then afterwards, guys, remember, you are never done until basically you die. Yes, until then, so that you should never really plan a rest day, but you are, because you are simply not done. See each other in tomorrow's video, guys. Until then, stay hard. Ciao, ciao.